top vendor solutions to discuss important topics that affect your bank. This is Selena Parrish, KBA Director of Membership, Products and Services. Today we are excited to be featuring KBA endorsed Strunk's Pricing Manager, a full-featured loan and deposit pricing solution and relationship profitability tool. With me today is Christy Daly, Senior Vice President at Strunk. Thank you for being with us, Christy. Tell our audience about your role with Strunk.
Thanks for having me today, Selena. We are so excited to be endorsed by the KBA and to be working with your bankers. I have been with Strunk for a little over a decade. I serve in a sales and account management role, as well as oversee our client support function. I actually started out at Strunk handling software implementation projects and client support calls, which eventually I took over management of that function. But I think the experience that I had with client support helped on the sales side because it allowed me to develop a thorough understanding of all of the features and benefits of our solutions.
It sounds like you stay busy, Christy.
I
So
do.
you have touched a lot of different things there at Strunk. And when,
Absolutely.
and when we talk about the pricing model that you offer, as a community bank, how would it benefit me to use a pricing model?
So I like to challenge bankers to consider how they set their pricing today and to let us show them how our solution would help to identify the drivers of profitability at their bank. Bankers put a great deal of effort and analysis into assessing the credit worthiness of a borrower, and we would never consider compromising on those standards. But when it comes to the pricing decisions that we make, generally a thorough evaluation of profitability is not part of the equation. Pricing tools don't tell you what to do or make decisions for you. They just provide additional information that allows you to make a more informed decision and to more effectively compete. Generally, the biggest problem virtually every single community bank in the country is facing is that we typically overprice our largest, most profitable customers, and we underprice our smallest, least profitable customers. It's not that we are doing this intentionally. We do it because the methodology and the processes that we have in place unintentionally lead to that result. So a pricing solution allows us to quickly and easily see where we are able to price more aggressively to win more business or maintain an important customer relationships, while at the same time we see where we need to price up so that we are more appropriately compensated for the work that we're doing for our customers.
Yeah, there sure is a lot that goes into that whole role of what the banks have to do when they're doing that pricing strategy. So if KBA members are a big regional or a mega bank, how are they using pricing tools to cherry pick the biggest, most profitable deals in my markets?
So, mega banks or big regionals, they all have their own very advanced, sophisticated internal pricing models.
Okay.
Those tools allow them to view every single deal that they make in the context of the entire relationship rather than in isolation. So, in turn, these applications aggregate all current and future expected revenue from a client across all departments. So then they cherry pick by illustrating that the bank can afford to aggressively lower the rate on one product to secure a massive profit on another, and thus ensuring that they win both pieces of business. So Strunk's solution brings that same kind of power to the community bank.
Wow, that's wonderful. And competition is great. So pricing manager
Certainly.
being there and available for community banks. So how can KBA members make sure that a pricing solution will produce results that make sense in their markets when they need to compete?
Yeah, so that's a great question. All of our assumptions are customizable. So we work with the team at each bank to make sure the targets that we set make sense for the bank and for your market. Sometimes we'll have a prospect tell us they don't like the results of our model. They'll say the pricing it produces is too high or too low. The reality is the pricing results are a function of the targets, as well as all the other detailed assumptions utilized by the solution, which, by the way, are also customizable. So the truth is the solution produces a result that is dictated by the targets and the assumptions of the bank's management team, what they're setting. So, in other words, it effectively produces any result that you want it to. The main benefit is discipline and consistency. With the pricing solution, the bank applies all of these variables in a disciplined way and applies them to every pricing decision made. So, regardless of who is making the decision, the specific characteristics of the loan, or when the decision is made.
Yes.
That's the key.
Yeah. And it sounds like the solution is very flexible from bank to bank. And so
Absolutely.
can can a pricing solution help KBA members win more business and increase profitability?
Yeah, so the short answer is yes. Um,
Good.
but as I mentioned earlier, the biggest challenge community bankers across the country face is we're overpricing our largest, most profitable clients and
Wow.
underpricing our smallest, least profitable clients. It isn't anyone doing that intentionally. It's those processes that we make, that we have in place, putting our bank at risk with our best customers and missing opportunity to maximize profitability with the least profitable customers. So Strunk's pricing manager can absolutely help a community bank win more business and increase profitability. The solution provides lenders with valuable information on each and every relationship, including all loans and deposits for a full picture of profitability. On deals that historically lose money for the bank, we can help lose less. That's a big driver. And Strunk focuses to gain lender buy-in so that the tool will be properly and effectively implemented across the entire lending team.
Wow. That's wonderful. And about when a bank looks at all the loans and relationships that already exist in the bank, is there integration to the core?
Yes, absolutely. So Strunk offers integration with the core. The solution is designed to pull loan and relationship data directly into the software. And then we, in turn, build robust profitability and origination reports. Those records can then be used to model that full relationship when a new pricing decision is being considered. The data is also used to develop a detailed loan profitability analysis that shows at a very granular level where the bank is making money within its lending portfolio and what components of the portfolio are not as profitable. So not only is this good information for bank management to help drive strategy, but it also is helpful for the lending team to see more specifically why the bank needs to take a different approach to pricing.
And I think you previously answered this. I just want to make sure that the audience knows that the pricing solution does consider all of the customers' relationships, including loans and deposits.
Yes,
Yes.
absolutely. Loans can be priced individually, or users are able to build out a relationship, which includes all of that customer's loans and deposits. Additionally, our ROE targets are provided for both the loan only as well as the full relationship. The other benefit of the relationship is it provides a view into how well the bank has done historically with a particular customer, in terms of profitability, because all of the loans done for that customer would be included in that relationship. So then you can see how profitable a decision has been, regardless of when that decision was made. If it was 5 years ago, 10 years ago, this year, it will let us see, have we historically met or exceeded our targets with this customer, or do we typically come up short with them? That can be an important consideration when we make the next pricing decision for that client.
That's a lot of great information to know about your customers when you're looking at their next loan opportunity to work with that customer.
Yeah,
So,
for
which
sure.
employees at the bank should use the pricing solution
Uh,
and why?
So we actually recommend that all lenders be given access to Pricing Manager as well
Oh,
as any loan administrators and then of course management. Lenders will be able to leverage the tool for each and every pricing decision, while management is going to have access to up-to-date reporting on their full loan portfolio, and our management reports, which group data based on loan type, lender, loan size, and ROE.
wow. So specifically, how can a pricing tool help the bank's lenders?
Yeah, so we get asked that a lot. We're
Okay.
routinely told by lenders that they pull a number out of the air,
Oh,
which
wow.
is a scary answer,
Uh-huh.
or
Okay.
or that their competition drives their pricing, which makes
Okay.
a lot of sense. So, Pricing Manager gives lenders a tool in their arsenal to ensure that each deal they work on is consistent relative to other deals that the bank makes. Utilizing a pricing tool makes the daily process of pricing loans easier for lenders. So it provides them a way for the lender to create optional scenarios for the borrower, which can also help to win more business. People love options. Even if they end up choosing the option that we would have typically offered to begin with, it leaves that customer with the impression that the bank was working really hard to win their business. It also helps to send the message that there is some detailed methodology behind our pricing decisions, and we're not just picking a number that then should be negotiated. So it can really help in all those ways.
Oh, it sure sounds like it. And I know that we often hear change is difficult. So
Sure,
how
sure.
can the bank make sure that their lenders will buy into a new approach to pricing?
Yeah, so Strunk's proven approach ensures lender buy-in through our training process. Arming our lenders with data and the drivers of profitability empowers them to make better pricing decisions. As I mentioned, they're able to develop those multiple scenarios that work for their customer. For example, if there's a customer that's particularly rate sensitive, the tool shows them that other factors can affect profitability so that they can still structure a deal that works for the bank. The other thing is we've taken a tried and true approach to our training process with lender buy-in at the center of that process. We have trained lenders at over 400 FIs across the country, so we know what works. We ask for specific examples of live loans, typically starting with deals we know produce a profitable result. That helps the audience see that the results make sense. It also typically produces results where we see the bank possibly could have won a deal that we lost or decided to pass on because we thought the pricing offered by a competitor was maybe too low. So it's easy for our lenders to see that the approach makes sense and could help potentially win more deals. Then, after that process of going through those more profitable deals, we start to dig in into areas where the current pricing process is producing less than optimal results. And at that point, it's hard for the audience to discredit the approach because they've already concluded on those profitable opportunities that the approach makes sense. So we work from there. And we work really hard to make sure that that takes place during our training sessions so that Strunk is kind of taking that burden off of the bank, not forcing the bank to do that work for us to make sure that their lenders buy in.
Well, it sounds like you're trying to make it as easy as possible when a bank makes the decision to go with a pricing manager strategy. And I have heard that these types of solutions can be complicated and difficult to use. Is that the case with Pricing Manager?
So not at all. Strunk's solution has been
Good.
designed with the user experience in mind. Our goal is to provide quick, accurate, and consistent pricing results. Lenders can model a loan in minutes. We're routinely told how easy our tools are to use. We display our results calculation by calculation for every month throughout the life of the loan. That way, if the user chooses, they can actually see how the solution is arriving at the calculated result. We find that this is a huge benefit in terms of our lender buy-in. In our case, lenders aren't thinking they input a few variables and then just click the save button, but then they have no idea how we got at the result that the solution is providing for them. They can see exactly how the tool arrives at each result, right down to the impact that each assumption variable has on that result. So it makes it really easy for them to see how we got what we got, and then they tend to begin to rely on that information as they make their decisions.
And it sure sounds like every bank needs to be using Pricing Manager. Just my thought.
I mean, I
And
love that thought.
yes, exactly. So all of our listeners, Chrissy needs to be talking to you. But
Absolutely.
if a bank made the decision, let's just say a bank called you up, got a demo, what does start to implementation look like? Are we talking weeks, months? What is that time frame for
So,
a new
pricing
customer?
the first loan is a matter of weeks. If we
Okay.
can get training on the calendar, it's usually the longest process is getting a date and a time that works for every single lender to come to training. So it's a matter of weeks to get you up and running. We go through tailored sessions where we talk about all of that assumption customization that I mentioned. We want to make sure that everything is perfect, and then you can start pricing your first loan that day. And then the integration piece typically takes us about 90 days to get up and
Okay.
running. But we actually recommend that you do that second, that the bank get up and running, start pricing live deals so that you can
Mhm.
start seeing the benefits of the program in deals that you're making today and not wait on that. And then we'll get integration up and running once it's ready.
So I think another regulatory, I guess, peace of mind would be is if I'm using Pricing Manager, it brings consistency to the methodology and the system that I'm
Absolutely.
using at the bank. Is that what I understand?
I would say that's a very fair statement to make, is that
Okay.
consistency is providing fairness. It's providing that
Yes.
approach across the bank, across every single customer relationship, across lenders. There are many benefits to that consistency, and I would say that that is absolutely a fair statement to make.
Yeah, well, it sounds like you bring a lot of benefits to the table when a bank decides to use Pricing Manager. And for KBA members who are interested in learning more about Pricing Manager, what is the best way for them to contact you or get in the lineup to see a demo of the solution? What do you suggest to our member banks?
I'm happy to have them reach out to me directly. I will schedule a live demo with their
Okay.
bank so that we can show them exactly how the tool works. I always encourage them to bring a couple of scenarios to that meeting so that we can run through a couple of real live deals that they're maybe working on today, or even something that's closed, but that they have some suspicion on, did we do as well as we could have done, to bring
Great
them to
idea.
that call and go through it together. So that call is typically about an hour long,
Okay.
and I'd love that opportunity with any of the interested bankers out there.
Wonderful. And there is more information about Strunk on KBA's website at kybanks.com. Is there any other key information that our bank audience needs to understand about Pricing Manager? Have we left out anything, Christy? Have we covered all of the highlights for the members to make sure they know everything about Pricing Manager and why they need to sign up?
Yeah, I think we've covered the highlights. So I'd just like to encourage them just to give us an hour to see what our tool does. And like I said, if you're running real life scenarios, we can help you see how we can make those deals work a little bit better for your bank. And just one hour of your time will show you exactly what our tool has to offer and what our proven approach can bring to your bank. So just encourage you to have an open mind. That's all.
Definitely. Well, thank you so much, Christy, for your time today, for providing our audience with this excellent information about Pricing Manager. And until next time, this podcast is a wrap.